Let's welcome in Manish Gupta, Senior Director at CRISIL Ratings. They have written a report about El Nino, which could lead to a shortfall in the rainfall this year. So first, tell us about such instances, what has happened in the past. If it happens, what happens to agriculture and tractor industry?
What is essentially on the tractor growth and volume expectations. Of course, I mean, the growth in tractor industry is impacted definitely through the rural economies to a large extent. If I give you a perspective, I think on a long-term average basis, tractor industry has been growing at around 10% or so over last 3 years. And this year, we are expecting a growth of around 13%. So we are setting up a very large base on which we are now setting our expectations for fiscal 24. One reason for this large base is also on account of very good monsoons that we have seen. We expect that on a base of 13%, tractor growth will be around 4 to 6% next year. Of course, this is a moderation to some extent, but since it is coming from a large base, it's like reversal to a long-term average rates as well. From a monsoon perspective, one of our call-out is this: in case of a El Nino kind of an event or any adverse climatic situations, there is a downside risk to the tractor growth as well. We're already seeing some signs of that, some unseasonal rains, etc. In the past, we have also seen 2015 and 16, which were the El Nino years, where actually the tractor demand growth fell by 10% and 13% in those years. So that was in that situation. Right now, we are still the word is final. The final word on El Nino is yet to be out, but that certainly is a risk to the tractor growth as we see it as of now.
So Manish, since you're talking about a bit of a cautiousness when it comes to demand, and of course there's a bit of moderation because of the high base as well, what happens to the margins? Because the capabilities of the company to take pricing hike will also deter a tad bit. Plus the commodity prices have been fairly volatile. What's your take of where the margins will be headed in FY24?
Yeah, so our take is that margins, there will be upside momentum to the margins, largely on account of the moderation in the commodity prices. From a tractor industry perspective, I think there is a significant dependence upon steel prices, and around 80 to 90% of the cost comprises of steel-related costs as well. We have seen the margins fall from as high as 22% in fiscal 21 to around 15 to 16% in this year, that is fiscal 23. From here on, the expectation is that there will be some moderation in the commodity prices, which will have a upside of 100 to 200 basis point on the profit margins of players as we see it for fiscal 24.
When we just talk about the rates in the system being so high, commodity prices being so high, plus if this actually turns out, what sort of an impact could it have?
No, so see, essentially, I mean, the volume in tractor industries are largely driven by the mood or the sentiments in the rural economy. Rural economy has been sluggish in the past, but there are signs of recovery that we are seeing. If you ask me about rural wages, I think in the first quarter of fiscal 23, the improvement in wages were around 4%. That improved to around 6% as we saw in October, November. The data from Manrega, etc., is also indicating that the dependence on Manrega-related employment is falling down. And that is an indicator of a more positive momentum building in the rural economy. And we believe that is going to be a key plus point from that. Added to this, the MSPs for the Rabi crop, that is where the principal crop is wheat. So MSP for wheat has been increased by around 5.5%, which is a substantial hike in the recent times as we have seen. So that will also push the momentum for rural demand in the coming fiscal.
Just before we let you go, wanted to understand, where do you think the bulk of the demand would be coming in from? Will it be the replacement demand, because that usually forms the bulk of the sales as well? And what about exports? Is that something which is becoming a big contributor as well to the overall sales?
Let me first talk about the replacement demand. So somewhere around 55 to 60% of the total demand comes from replacement. And normally the tractors have a replacement cycle of 6 to 8 years. So going by that, 2017 and 2018, these were some of the good years in tractor growth. And since the volumes were high in that period, our expectation is that in fiscal 24, the kicker coming in from the replacement side, that should be higher. So that is one part of the question. Second, talking about export, normally 12 to 13% of total volume sales comprises of exports. Exports has been somewhere to the tune of 80 to 85,000 per annum on an average basis. But in fiscal 2022 and 23, I think things have started to change. I think this average volumes have gone up to as high as 120 and 130,000. But in fiscal 23, we are already seeing some bit of a moderation. We have seen a 2% kind of a degrowth in export, and that is largely coming from the global economies, which are slowing down. Bulk of the tractor exports goes to US, Europe, and countries over there. And because of the slowdown, our expectation is that some bit of a slowness in exports will also be there.
Okay, so a bit of a slowness in exports is also possible. Thank you, Manish, for joining us with that quick take on how the outlook is for the tractor industry for FY24.